cannot be trusted.
In May this year, Kenyan authorities yet again had issues with Ugandan powder milk exporters with restrictions. Now this has now led threats of legal action from the East African Business Council, saying the Kenya-Uganda trade dispute is erosive to the East Africa Common Market Protocol, which is the second pillar of the integration. Rajabu Hassan reports from Arusha, Tanzania.
John Bosco Kalisa, EABC's executive director, says the council intended to sue Kenya in the East African Court of Justice if Kenyan authorities continue their refusal to issue import permits for dairy products from Uganda.
We can use the bilateral engagement, but if it fails, then we raise the matter to the East African Court of Justice. They have the capacity, they have the competence to resolve such issues. And they have resolved one of the issues, like BAT Kenya and BAT Uganda. Their products not accessing one market when it is one entity. We see the same now with recent maize from Tanzania to Kenya. So this, we can't build a region with such a kind of protections.
In March, the Kenya Dairy Board KDB suspended permits for the import of powdered milk from Uganda, a regulatory measure occasioned by falling Kenyan milk prices in the domestic market. However, the East African Trade Council said the move contravened the East African Community Common Market Protocol, a protocol signed in 2010 to remove barriers that impaired trade between member states. Currently, Uganda is left with 24 million liters of unmarketed milk, hampering the efforts of producers, prompting this appeal by Uganda's representative in the East African Legislative Assembly to the Kenya's President William Ruto.
So my call is for President Ruto to look the camera in the eye and stop these cartels that is spoiling trade between our different partner states. It should be a call at the highest level of our leadership. And this is where East Africa should be going.
Searching Uganda is calling for the readiness of member states' trade bodies to remove all trade barriers at a time when intra-regional trade is still fragile.
Our intra-trade is already suffering and struggling at only 20%. And the current situation today really does depict how fast we can move to addressing non-tariff barriers in the region.
Kenya is a key buyer of Uganda's dairy products, as Uganda produces more than 2.6 billion liters of milk per year, while its domestic demand is only 80 million liters. The surplus penetrates the Kenyan market, in which Uganda's dairy products are sold cheaply. Rajabu Hassan, KTN News, Arusha, Tanzania.
Very well, we hope that the fighting between the East